Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast. Okay, so the one thing that's interesting here is the blue line has been the 9-day. We've talked about this for a while. We're spending some time below the 9-day, and it's the first real opportunity for the bears to close it and keep it below the 9-day in a while. I mean, they tried it a little bit here. It's the best look they've had. I said January. This might be the best look they've had since they really lost it on the 27th of December. So how price reacts to this is going to be important. The 9-day sits in. You can't really see it there. So the 9-day sitting at about 93, 94. You've got the weekly pivot up at 98. So hourly chart. Daily pivot, 9 days in here, right? I can't spell. Weekly pivot, 90, 98, 68. So we saw lower high rejection on Monday. We saw a lower low. Now, we had weekly pivot resistance, and more importantly, they didn't let this higher low turn into a higher high up and over weekly pivot. They held it in. That's pretty important, and it's actually a little impressive considering the bears' inability to execute things over the over the past couple of months, basically all of 2019. So it slipped back down in Globex. You got potential lower highs. Is it a little, it's a little sloppy, it's a little whippy. It's starting to consolidate a little bit here. The key is, can they break this low? And if they can break this low, can they convert the daily midband? The daily midband comes in at 67 even. So the daily midband basically is this lower low. The low from Monday is 67.5. The daily midband is 67. So the bears, in order to have a leg down in this market, okay, so in order for this to really break, okay, in order to stop the grind and really break, and to break the green, they got to break the green line. That's the daily midband. That's 67. That's the deal. Otherwise, what's happening? We pull back probably to the daily midband. We engage it. Remember, we talked last week and the week before about we're going to engage the daily midband either as a function of time, because lower prices get taken off the back end of a moving average, or as a function of price. Right now, I think mostly this is happening as a function of time. Okay? This grind has been happening for a while, and it's been happening in a relatively tight range, and so here comes the 20-day moving average to come up and be dealt with. How price reacts to this test is important, because what you're left with, if its support is, all right, we pulled back to the daily midband, it held, we bounced, we're buy dips. At that point, this 28.17, what is it, 28.1975 doesn't have a chance. It'll get broken, and we'll do another leg to the upside. Okay, basically all of these years that have been just up ramping years, in situations like this, a test of the green line, it's going to be support and a bounce, buy dips, and off we go. So is 2019 going to be like that, or are we going to have something different? Are we going to have something a little more two-sided? Are they going to break this, head down, deal with the lower level, maybe do a month or so of a lot of sell rallies coming down? You see the larger volatility creep in. I don't know. The 2019 has a lot of volatility potential. We've seen it at times. And how price reacts to 67, not just today, but this week, how price reacts to the daily midband wherever it is this week, is going to tell us a lot about what the rest of March is going to look like into April. All right, so join me 920 on Instagram. Join us in the room. Take care. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.